Hello and welcome to Pro Trader Strategies Market Commentary for January the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data and economic things going on today in the overall markets. One thing is Davos is going on over in Switzerland, but more importantly, we have CPI numbers coming out. This is the Consumer Price Index. This is the thing that really economists look at for a gauge of inflation that the consumer is feeling, which is the most important. Consumer spending is going to be wrapped around this number quite a bit. So with German CPI, final indication came in at 0.7%, was expected to be 0.7%. Then the Eurozone got their final CPI numbers coming in at 1.1%, was expected to be 1.1%, so right in line with expectations there. Then they got the final core CPI. Core CPI strips out some more volatile aspects of that number, and they take out food, energy, tobacco, things of that nature. So came in at 0.9%, was expected to be 0.9%, so right in line there. Here in the United States, we got our CPI number coming in at 0.3%, expected to be 0.3%. Core CPI, again, stripping out those food and energy aspects, came in at 0.2%, expected to be 0.2%. Then on the industrial side, we got the capacity utilization rate, 75.5%, right in line with expectations. Industrial production, 0.8%, in line with expectations. They did lower the industrial production numbers from last month down a little bit to 0.7%. Then we also have Kashkari speaking today, actually right now, causing a little bit of movement in the markets. But we also got the National Association of Home Builders coming in with their index at 67, was expected to be 69, so slightly lower than expected. Later on today, we have the Beige Book. It has a tendency to move the markets, albeit it is mostly a lagging indicator. It's still a good number to look at. Then we also have Janet Yellen speaking later on today, just before the markets close, so she could add a little bit of volatility to the overall markets. Then crude oil is actually having a really big rally in the last 15 minutes or so as Kashkari started speaking. But if I can pull this up real quick, we can check it out on a 15-minute chart. Only down about 30 some odd cents, but the fact of the matter is it just made about a 70 cent rally in the last 15 minutes. So just a big blast off as soon as Kashkari started speaking. It came off of its lows. I haven't been paying attention really what he has said, but could be one of the catalysts for that move. Then we have on gold futures. Gold futures up slightly after yesterday's big rally. We are very close to going up and testing that 200-day moving average, but I'm looking at this as it's going to kind of roll back over. It's had a nice big run. I'm looking for a bit of a pullback here, despite the fact that when you see the 9-day moving average crossing over the 50-day moving average, that's an indication of a bullish trend going on, as we saw back here in the end of January. And then if the 50-day crosses over the 200-day, that is even more of a stronger indication of a bull rally. So that's something for a longer term trader. So I'm going to fade this move right now. I think it had a big move yesterday. It's been battling back and forth, but I think that the bulls are getting a little bit tired in there, looking for a little bit of a pullback. And I'll talk about a trade that I put on today for that type of scenario. Then the bonds down pretty big today, actually taking back all of their gains we saw yesterday. Kept trying to trade above this 50-day moving average, just never able to get up and settle above there, which is really important for the bulls to gain a little momentum to the upside. Today, testing that line in the sand again and falling back off. It's going to be very interesting to see if it actually even trades and settles below that 9-day moving average. If so, would indicate that this little bit of a dead cat bounce is what we used to call it on the floor, a bounce off of the 52-week lows and then presume to the downside. So keep your eyes out on that. I have no trades in mind really as of right now, but could be looking at something in TLT or something along those lines to take advantage of that kind of move. Then with the Dow Jones Industrial Average after yesterday settling below that 9-day moving average, again indicating more of a bearish move ahead, I could easily see the Dow Jones wanting to come down and test this 50-day moving average relatively soon. I think that the market's due for a bit of a pullback, some profit taking after the long rally we've seen. I'm not necessarily thinking it's going to be a 10-20% down move, but we could see a nice little slight correction as some people start taking some profits up here before we see that Dow 20,000 everybody's talking about. Then with the NASDAQ up slightly on the day, but for all intents and purposes, very much an inside day as we look at even the entire candle is actually within yesterday's body. So that is the inside day type of scenario. All these economic data points came in line with expectations, just has not been adding any type of volatility to the market whatsoever. So Dow Jones, NASDAQ, even the E-mini S&Ps, pretty quiet, low volume day, and just not a lot of volatility going on. Then with the E-mini S&P up 2 points on the day, again, you can see it's an inside day for all intents and purposes. One thing I want to note about yesterday when we were talking about this, the day session loves to print the overnight highs and lows. They want to be the ones that have those prints in the range. So yesterday I was talking about it, wasn't really sure we were going to see that low printed within the day, but sure enough, right around 1 o'clock, the market just sold off to get that print and then snapped back to about where the mid-range of the day was, the point of control where the most time and volume has been spent, which was a pretty interesting thing to watch. Today, again, trying to print the overnight highs heading into the morning, came just slightly shy of that, and then before the market really kind of gravitated to the downside off of some of that economic data, but I don't know that that was necessarily anything but lack of volume to the downside there. I know a few trades that I've done here. So ORCL, I talked about this yesterday in the daily market commentary that I was looking to put this trade on for the call, short call butterfly. Wasn't able to get it towards until late in the day, but I talked about having this trade as a working order and finally got to put on the February 36, 39, 42 call butterfly. Then it's a short call butterfly. So for every one of the Feb 36 calls, I bought 2 of the Feb 39 calls to sell 1 of the Feb 42 calls. Now, one of the really important things with this is with this strategy, you can immediately set yourself up for a losing trade. And I go through all of the rules and how to set this up for a higher probability trade in my webinar that I did on Friday. So check that out because I go through all the rules. The only thing you can really control is order entry. And I talk about how to enter this order to set yourself up for a higher probability of success. And some people just talk about, you sell 1 to buy 2 to sell 1. They don't give you the rules as to what volatility should be, what kind of premium you should collect for this type of trade. And I'd go into that. You can actually set this trade up and enter it, and you have locked in a loss immediately upon order entry. So I talk about how you can set that up to avoid those mistakes. It's not one of the easiest trades to follow all these rules, but in that it's to create a situation where you are setting yourself up for success rather than for a loss. So check that out at protraderstrategies.com. And then on to another trade that I actually took off was in GPS Gap Inc., which is ticker symbol GPS. Now, if you remember, we had high implied volatility in this strategy. We're right there around this point of control, which is where the most time and volume has been spent. Stocks have a tendency, after moving out and away from that, when they migrate back to that, they settle down because it's kind of a happy place for that stock. It's where most people are long and short and are very content at those levels because they're not losing money, they're not gaining money, and they're just kind of happy at that point. Anyway, so I put on the February 25 straddle in there. Originally collected $2.93. We got the volatility to come out. We got the market to stay right there at the point of control. So we've got our directional assumption working for us. We got the volatility crush and was able to cover this trade rather quickly for buying back for $2.20. So right in line with my expectations on that, and the percent of max profit. So it was right around 30-ish% of what my max profit would be on that trade. But again, because it's a low probability trade, willing to accept a little bit less of a profit on that to because I was beating the odds on it. And if you can beat the odds on this strategy, that's when you take your profits, and that's what was happening there. Now on to the gold trade that I was talking about. This is GDXJ, which is the junior gold miners. GDX is the bigger gold miners. So GDXJ I like a little bit better because it tends to be a little bit more volatile, and you can have a situation where gold or GDX doesn't have high implied volatility, but these junior gold miners will have more volatility pumped into them, allowing us to get bigger premiums in a sense. So with GDXJ, I went into the February, sold the 44 calls for 55 cents. So it's right in line with my rules on that. I'm gonna have a short leash on this because again, this is where we're having one of those situations where we could see the market want to move to the upside because we're having these moving averages start to cross. So I'm going to have a really short leash on this one, but the 44 calls, because of that high implied volatility, gets me above this resistance area, and I think it's going to set myself up for a nice little trade there. So hopefully if we get some volatility to come out, I'll be able to cover this trade rather quickly, even if I'm directionally wrong. Netflix is going to be one of the ones that kicks off the earnings season. Yes, we did have some of the banks like Citicorp and things that I didn't really want to play the banks. So with Netflix, though, it's one of the ones that I generally will trade during the earnings season. And I am looking at probably doing a strangle in here. I think if we were to settle right around here, I'd be able to do the January 118, 148 strangle in there and collect around $2.50. So if you're following me on Twitter, I'll probably tweet that out later on today as to what I ended up doing on that. So you can follow me at Wolfman's blog. Friday's webinar, we're going to be doing the put butterfly. And again, it's the short put butterfly, right in line with this butterfly series that we're going to be doing. So check it out, protraderstrategies.com. Sign up for that because, again, it's a situation where you can set yourself up at order entry to lock in a loss, and I'm going to show you how to avoid those mistakes and create a situation where you are increasing your probability of success with this strategy. And it is a lot of rules to go over, and you have to follow those rules in order to be successful with this strategy. It's not just putting it on, hope and pray. We're going to show you how to set this up so the probabilities are in your favor. All right? That's all I got for you today. If you can't take that, take it easy.